Well, the market's certainly rebounded significantly today, and I would argue that to a large extent it's a reaction to the near panic stations that we saw in previous sessions. Arguably some of the falls, particularly in the financial sector that we've seen over recent days, have been absolutely enormous. Yes, I think it's undoubtedly the case that there will be an economic impact, certainly in the UK and perhaps to a lesser extent abroad, but to see some banking stocks down 20, 30, 40%, certainly looks to have been overdone. So I can certainly rationalise that. Also, I think some of the political rhetoric has been dialed down a little bit. Perhaps we're not gazing so much into the economic abyss that many thought that we might be. Certainly in the run-up to the referendum, of course, we had Project Fear here in the UK. So I think there's a steadying of nerves, but of course, very early days yet. We've come down a long way. We've still got a long way to go on the way up, and tomorrow is another day, but we'll still be here. Okay, the pound was trading up a little bit earlier on in the session, got to 134 and change v the dollar, softened somewhat over the last couple of hours and is pretty much unchanged now at 133. In terms of bond markets within Europe, you have seen perhaps a little reaction in and around UK sovereign debt, gilts. That might be ascribed to the move overnight by Standard & Poor's and Fitch to both downgrade the UK sovereign. Having said that, it generally seems to be a risk-on day. You've also seen bunds have a very mild sell-off as well, so I would probably be a little bit cautious in theorising that this is the start of a more profound sell-off in UK sovereign debt.